bring in our next guest, Kevin Green, joining us, City Markets correspondent for the Schwab Network to discuss digital assets. Kevin, this is the only risk asset apparently that didn't get the memo that the markets are moving higher this week, as Bitcoin has taken a U-turn off of its recent highs, and it's working its way back to levels we really haven't seen since February of this year.
Yeah, seeing a little bit of the sell-off, but if you're looking at it from an intraday basis, it has been able to recapture some of those losses, down about 4.7% if you're looking at the Bitcoin futures. Now, there's obviously a couple of news items around Bitcoin, as well as just some technical selling. If you actually look at a weekly chart, we were pretty much overbought and seeing this kind of flag pattern really take place. And right now, we're just seeing that break down here a little bit, but there is a little bit of optimism here if you are a technician. We appear to be trying to bounce off of the 38.2 retracement level if you're kind of looking at the levels at around June 17th of last year, going to the recent highs that we've had. We are hitting a near-term area of support. So we want to be able to see Bitcoin really bounce off of that, try to reclaim that $60,000 level, and really try to contain some of these losses. But the Mt. Gox news that came out is discussing that their bankruptcy trustee, if you will, is going to start distributing Bitcoin and Bitcoin Cash to some of those because of the bankruptcy, and that could actually create some selling within the market. And then there's other fears that are out there, but I think right now this is just a technical sell. We've seen this type of rapid action before. This is probably one of the riskier assets across all the assets that we cover here on the network. So seeing a pullback right now is not really that surprising, and once again, more of a flag pattern than a complete breakdown to the downside right now.
You know, I was looking at the news, Kevin, and the story related to the Mt. Gox releasing some of those Bitcoin holdings, those funds. And here, to your point, the 38.2 retracement level, the Fibonacci levels to be watched as well in terms of a breakout. But I'm sort of looking at this longer-term trend to the upside. And yeah, this move back to those February levels, not necessarily what the bulls have been looking for, but in the longer-term trend to the upside, possibly just providing another one of those buy opportunities.
Yeah, exactly. And usually we kind of talk about Bitcoin when it does slide like this, but it has been able to recover fairly quickly. And so this is just a product that's going to be very volatile. And I think you're also kind of looking at the type of nature of this product here. When you have political uncertainty, especially in the South American markets, or if you're looking at the African markets, that's typically when we actually still see a significant amount of buying activity occurring. And when that does abate, that's when we actually do see Bitcoin abating too. It's an odd correlation, but those are really the markets that really utilize it for the utility that it's built for. So that's something to also kind of keep your eye out on. But I'm kind of right there with you. I mean, even if we hit those February levels, is that completely a loss? I mean, it's still, for the most part, in its uptrend. You would get a little bit more concerned if you break down through $40,000, but it's still a long way to go from there. I think technically and from a structural standpoint, it's still more of a bull flag that's taking place rather than a technical breakdown.
Kevin, I've seen a lot of thoughts around this idea that the decoupling with the NASDAQ that we've seen lately is actually a good thing. Is that Bitcoiners coping a little bit, or is that just more, and perhaps more reason to just go to the higher beta stocks as they're still doing okay? Or is this sort of the canary in the coal mine to risk assets?
Oh, that is a good question. I mean, it's very hard to be able to say that because we haven't had that much of those many corrections when it comes to the equity markets over the last year and a half, right? Where we have had corrections in Bitcoin a little bit more frequently. So I'm not sure if this is going to be the canary in the coal mine where it comes to the fact that maybe you need to look into more defensive plays and things of that nature. I think right now this is more of a technical pullback. I mean, the move from 25,000 all the way up to 75,000 is remarkable. So even looking at a 50% retracement level from that standpoint is not something that's outside of the norm for a new and developed market. I think we have to also kind of keep that in mind. Now, when you're looking at the Bitcoin miners, I think that's even a worse situation for them right now, because not only are you seeing the price of Bitcoin going down, which does hurt their portfolio and their balance sheet, but you also have post-halving, the mining for Bitcoin gets harder and harder, and those margins are going to contract. So you have certain names that are out there that might be a little bit too levered to the Bitcoin product, and that could also actually impact them when it comes to top line growth as well as bottom line performance. So I think that's going to be the one to really look forward to as we come up into earnings season and we start hearing more around the outlook for Bitcoin and crypto as a whole.
Yeah, we'll see what happens to both your points, a little bit of intraday recovery in the asset, also with Ethereum as well as it's testing that 3,000 mark once again in those futures products. Kevin Green, appreciate it. Thanks for joining us here on Next.